Well, we got a big week ahead at Nelson Financial Planning. We celebrate our 40th anniversary as a business. So exciting times. The folks at the Orlando Business Journal kicked off our year strongly by their profile in their book of lists for companies that had been around for 40 years, much like the Orlando Business Journal celebrating their 40th year as well. So a nice profile in the Orlando Business Journal earlier this year. The actual date, though, is this coming May 1. So we're excited about that. And I thought, why not have the second longest tenured member of the team join us on this week's program? Christina Lamb, welcome to the program.
Thank you. Good morning, everyone.
Exciting week ahead, that is for sure. With our 40th anniversary, we got a cocktail party scheduled for our clients to raise a glass and toast them because, of course, without them, we don't make 40 years in this business. And then also that morning, going to be interviewed on Good Morning Orlando. So looking forward to that as well. Also, Christina, this is going to be sort of our annual show where we talk about the IRS Dirty Dozen tax schemes, right?
Yeah, definitely. That's where the IRS is going to go over some fraudulent schemes and things. There are 12 of them, obviously, that are affecting people.
Now in its 22nd year, I think that sort of educational campaign that the IRS does really is pretty important to help guide taxpayers, or should I say guide taxpayers away from these types of tax schemes that are out there. That's for sure.
And a lot of them are helpful in many situations,
right,
not just with your taxes.
That's a very good point. One of them in particular that is new to the list this year is actually one that I think we saw a lot at the office in terms of some of the phishing emails that are targeted directly to tax preparation firms as well.
Yeah, phishing and what they call smishing, which is when you get a text message kind of similar to an email, and basically if you click on anything in the message or fill in anything, they're stealing your information or logging into your device.
Yeah, no, it's certainly something that everybody has to be aware of, whether you're 98 or 8. There are a lot of folks out there that are looking to steal your identity. So we will cover that as we do every year as part of our normal episode here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning. Joining me on this week's episode, of course, is Christina Lamb. She is an IRS enrolled agent as well as a certified financial fiduciary. So I know that you always like to be a part of that discussion of the IRS Dirty Dozen tax scheme, but another claim to fame, if you will, is that you are the second longest tenured employee at Nelson Financial Planning. So how many years have you been with us?
21 years.
21 years,
yeah.
Okay. And I guess that means that I am the longest tenured employee, having been there for 25 years. But you know what was really neat, and Jamie at the office kind of manages our social media. I was scrolling through that this morning, and on Facebook, we have a great picture of you and me and other folks from our 30th anniversary.
Yes.
And all 6 of the people in that picture are still part of the team.
Oh, wow.
So that's really pretty neat in terms of, longevity and the consistency of the team, particularly over the course of the past decade.
Absolutely.
So pretty
and employee happiness, obviously, if they're sticking around like myself. It's a good environment to work in.
Well, very good. We appreciate that. We always try to make sure that it is. That is for sure. But over that 21-year, 25-year period, we have certainly seen a lot of headlines, sort of economic ebbs and flows, I guess 6 different presidential elections. And so as we celebrate our 40th anniversary on Wednesday with our clients with that cocktail party, what headline to you, Christina, kind of sticks out as kind of the one that really captured your attention, if you will, over that 20-odd year period of time?
Sure. So I've been through a couple, but I'm going to go with the most recent because I feel like that one was more emotional to me than all of the others for some reason. And that's going to be the COVID crash of March of 2020. The market was down like 19 points in one day. It ended up being 35 points down, or 35%, sorry, down from the high, only to recover within a matter of months, and ended up with a nice, pretty positive year for the most part. But for me, I felt like it was a little bit more emotional. I think we were all in a different state because of the other things that were going on. But it was such a quick turnaround. It made me really look into the advice that I give folks all the time is don't go on your emotions. Make sure you're doing what's best for the market, which is to stay put.
Well, and in particular, and I think anybody with a child, I mean, obviously Ethan was particularly impacted when they shut down schools and things like that. And certainly dramatic and just a high level of uncertainty about what the future in fact held for all of us, for that matter. I think for me, I'm going to go a little bit more back in the bag, if you will, in terms of headlines. Probably the one that has to stick out most of all for me is 9/11. Okay, so, and that probably predates your tenure by maybe a year or two.
Yeah, at the firm. I certainly remember where I was
certainly
at
remember
that point.
9/11.
I think we all do.
Correct. It's one of those things where you always remember where you were when that happened. And for me, I was at the office, back in, we used to have a multitude of TVs here at the office, and so I just remember the videos and watching that, and I actually remember leaving the office because at that point, September of 2001, I had just had our first child. Nelson had just been born earlier that year in March. And my goodness, just the uncertainty of that period of time, just pretty dramatic, and not really knowing what was going to happen next, so that sticks out in my mind. Another one that I know you were here for was the fall of 2008. That was certainly a very dramatic period of time. I remember the Monday, that first Monday in October, when it looked like the wheels were kind of coming off the wagon, so to speak. And it was that Monday, and I remember, and we didn't do this very often, so you knew it was significant. Jack and myself and Frank Dass all kind of huddled up and tried to kind of strategize or come up with a game plan about what was gonna happen, because that Monday, Congress was voting on the TARP program, which was the relief program for large banking institutions and things like that. And I remember Frank Dass saying, they're going to pass this because there's not really any other option. I have to pass this in order to show the markets and the economy, some faith in kind of the system. And of course, Congress didn't pass it, and they passed it by that Friday. But I remember that week, not unlike the COVID shutdown, where you had that 20% decline within just really, really short periods of time. So those are kind of some of the more, bigger headlines. The reality is you got through every one of them, and the world kept spinning, if you will. So anyway, we're going to take a break. When we come back, we're going to talk about some of the other memories that we have as we kind of think about this week and celebrating the 40th anniversary of our firm at Nelson Financial Planning. So stay tuned with us for more on that here on Dollars and Cents with Joel Garris and Christina Lamb. So Nelson Financial Planning celebrating its 40th anniversary. In fact, this coming week on May 1, we will turn 40. Wish I was turning 40. I'm a little bit past that. But we are happy to have you join us here on Dollars and Cents. We're talking a little bit about some of the headlines that happened over the course of, for me, the past 25 years, for Christina Lamb, who's joining me on the program this morning, the past 21 years being with Nelson Financial Planning. And so before the break, we were talking about some of those headlines that really kind of caught our attention, sort of really burned in our memories, if you will. What are kind of some of the things that stick out in terms of some of the just the general experiences about what we do at Nelson Financial Planning over the course of the past couple of decades or so?
Yeah, so I think what sticks out kind of the most to me is just being able to help clients and understanding and being able to communicate with them, and then seeing that follow through over time and, make a difference in their lives. And from the tax side of things, I mean, just this year we had a client who was a widow, and she sold her primary residence several years after her spouse had passed away. And there is a special exemption for widows to save an additional $250,000 on the capital gains, bringing that up to $500,000. So she was unaware of that, and it turned into a $40,000 tax savings for her.
Wow.
So it's nice to see those kinds of things come to fruition.
Yeah, great example. Great example. For me, I would have to say this radio show. Mm-hmm. It is a large part of what we do each and every week. We've been doing it every week now for over 25 years. Jack Nelson started that show probably about 12 or 13 years even before that. So the show itself is not quite hitting the 40-year mark, but pretty close to it. For those of you who remember my father-in-law, Jack Nelson, he had a very distinct voice, a distinct character as well. Certainly it was my privilege and honor to host the show with him for the better part of a dozen years. One of the things that he would always say when he was talking about money, he would spell it out, and I'm going to do it a terrible disservice, but it would be MONEY. That would be his way to kind of talk about money. So certainly have some fond memories of the radio program over the course of the years, and now doing it with the rest of the team, doing it with you and Rob and Kristen and the rest of the team. It really, it is a lot of a big part of what we do, because we do it every week. And then I would agree, Christina. I think the relationships that that we've built over working with people for such a long period of time, and the really neat thing about it is we see people that just are starting out, $100 a month into an IRA. We've got plenty of examples of that over the years where, because our firm doesn't have account minimums, and we still don't have account minimums, because we really do like to experience that journey with people over the course of decades that allows them to start and do the right thing and save money, and as their earnings increase, that they save more money, and now getting to experience many of them retiring millionaires, and so that's really kind of a neat experience to be able to have been a part of that over the years. And I guess the other thing that's kind of interesting too, as I think about our philosophy as a firm, our investment approach really hasn't changed really a whole lot over the course of the past 25 years that I've been here. I mean, there's just some fundamentals when it comes to saving and investing that just that are timeless, if you will.
Absolutely. I mean, it's kind of, I like to put it as keeping it simple. Buying and holding quality investments that have longer track records, good diversification, a little bit of bond, international, domestic, things of that nature. Starting early, as you said.
Sure.
I mean, that's one of the things I personally really can appreciate from the firm is that everyone gets the same advice. You know, whether you have $100 or $1 million or somewhere in between, everybody's gathering that same information. And then also regularly rebalancing your portfolio, making sure you're not heavy in one area or another.
Right. No, that's right. I mean, all fundamentals. Another way that I always like to describe it with clients is, you know, we're going to own the large companies that make the stuff that the world uses every day. And of course, that doesn't make it immune from decline. But when you think about those large global brands, Got to believe that those are still going to be with us 5, 10, 15 years from now.
And they're names you recognize too,
right.
So you kind of know a little bit about what you have in your portfolio.
All around you, that is for sure. And I guess what's interesting is, you know, what strikes me sort of more and more as I age, if you will. I'd like to think that I am ageless, but the reality is that I am not. Is to your point, how hard it is to keep things simple. In our book that we wrote last year, Next Gen Dollars and Cents, we actually included a quote from Steve Jobs that I think really kind of summarizes that pretty well. And that is this notion, and the quote goes something like this: simple can be harder than complex. And you have to work pretty hard to get your thinking clear to make it simple. And my goodness, I would say in today's world that nothing is more true than that. Yeah, I just keep coming back to, you know, just follow the fundamentals, and to your point, keep it simple, and ultimately that's the best way to achieve financial success over time. Another one that I've of probably more of late been talking a lot about is that my father-in-law, Jack Nelson, always had a bumper sticker in his office. And it's actually one of the things that I still have from his office, and I have it in my office. And not that your investment philosophy and life philosophy should be necessarily summed up by a bumper sticker, but this one actually, the more I quote-unquote age and do this, the more that rings true. And what the bumper sticker says is, it says, go first class, your heirs will. And if that doesn't kind of summarize, unfortunately, what we see way too often around the office.
It so does. And I think the generation that it's affecting most doesn't really like to spend that much.
Yeah. Well, the answer is make sure it is your money. Those that receive your money when you're gone will not value it in the same capacity that you do. So make sure that you are spending it and enjoying it. And I think that's the other part. You don't hear a lot of people in the financial business talk about it, but after all, what are you saving money for? Right? You're saving money to enjoy it for later on. So make sure you're taking the time to enjoy it as well. But
and don't wait too long to enjoy it too. I think that's
correct.
What we kind of see.
The aging thing kind of keeps happening, right?
There's a small space there.
Right. Well, I mean, not small. I'm trying to extend that window as much as possible.
I didn't health-wise per se.
Right. Tomorrow is never guaranteed for anyone.
Yes.
And we don't know what tomorrow will bring. That is for sure. So it's about kind of striking that balance between saving for the future, saving for tomorrow, and enjoying today. That is for sure. I think far too often, in the grand scheme of things, probably there's a little bit more enjoying for today out there in the world at large. But for those that do save, make sure that you are enjoying. But our job, though, is not always easy, to say the least. Certainly some tough parts. So when we return, I thought it would be good, Christina, to kind of just share some of the tougher parts of what we go through on a regular basis here at the office as we do a little reminiscing and thinking about 40 years as a firm that we will celebrate this coming week on Monday, May 1, here at Nelson Financial Planning. You're listening to Dollars and Cents. We'll be back after these messages. So if you missed the first half of the show, our firm, Nelson Financial Planning, celebrating its 40th anniversary this week here on May 1. Joining me on this week's program, of course, is Christina Lamb. Christina, between you and I, we've had 46 years at Nelson Financial Planning. And so doing a little reminiscing of some of the big headlines that we've seen over those years. Also, some of the just kind of the investment philosophy and those kinds of things that really, as we were talking about in the prior session, haven't really changed a whole lot. The fundamentals of investing remain the fundamentals. That's always the case.
Absolutely. I think that's one of the things I appreciate about the firm over my 21 years is the consistency in the way we do things and just kind of keeping it simple, agreeing with that, and the way we treat clients.
Yeah. Well, I mean, there's certainly some tough parts of the job that is, always present when you are helping people, because not every day is smooth and not everything turns out the way that you plan for. And certainly the variability of the headlines and the economy and all of that. Wrinkling in with it that money is one of those emotional things as well. That's for sure. That is always got some high level of human emotions that we kind of have to deal with. Would you say that might be the toughest part of what we do?
To some extent, yeah. I mean, over, being here long term, you really develop relationships with clients. And you become friends of sorts to an extent. And, you talk about things of going on their lives. And, there is a lot of emotion involved in, having those discussions and, helping them make educated decisions with their finances as they go through those struggles in their life.
Yeah. No, and then certainly being able to manage those emotions. You were talking earlier in the program about kind of the emotional reaction to COVID and the shutdown, and then consequently the market decline during that period of time. And it really is a big part. Emotions is a big part of your finances and your financial success. That's why, in our book, The Next Gen Dollars and Cents, that's chapter 1. Chapter 1 is about human emotions. And so sometimes I think maybe a degree in psychology might have done me better than an engineering degree based on kind of where I wound up. But be that as it may, the other comment I would make is another tough part of the job as we kind of know people over an extended period of time and create these relationships and fundamentally become friends, is that when you do get those curveballs of life, right? When maybe kids veer off path, or you get a health issue, unfortunately, I have to go to funerals every now and then, and those are always tough, but certainly part of it. 40 years, certainly a long time.
Absolutely.
And so thankful to have had the opportunity to help so many people over the years, and obviously we've been truly blessed, and look forward to many, many more ahead in the years ahead, because even though I am aging, I'm not that old. So there you go. Anyway, we're going to shift gears here on Dollars and Cents. Our purpose, after all, is to help you make sense out of all of life's decisions involving your dollars. So we want to shift gears and start to talk about this dirty dozen list that the folks at the IRS put out. They've been doing so every year since 2002, and it sort of has become sort of an annual part of what we do, where you're joining me on the program to kind of, every time the IRS rolls out that list, we always kind of time a radio show podcast in connection with that list, so we can spend some time going over all of that. So what what's on what's kind of first up on this list, and what's kind of the purpose of this list in the first place?
Yeah, so I think what the IRS is trying to do is really educate folks about the fraud and the bad schemes that are out there. You know, we get calls from time to time about obscure letters or emails that clients get, and I'm glad they call in, because this way we can help educate them and let them know what to look for. I mean, I think the old saying, if it's too good to be true, then it is,
that still
really
applies.
stands
Yeah.
up top.
Yeah. Well, and I think what people miss is that, you know, these scams and a lot of this identity theft and those types of things, this is big business in places like Iran, Russia, North Korea, and other kind of rogue states. They want to see us get parted from our dollars, and so a lot of these come out of places like that, and certainly it's unfortunate. So what should we not be falling for on this list of tax schemes, courtesy of the IRS?
Yeah, so the first one we kind of touched base on a little bit earlier in the show, and that is phishing and smishing emails and text messages that these unscrupulous people will send to you via your phone or your computer, and they're looking for you to click on a link or fill in some blanks or download a file, and in doing that, they're stealing your personal information or gaining access to your device.
Yeah, I mean, and they're good at it. I mean, these are legitimate looking requests,
job.
Right? They're good at their job, so you have to be even better and ultimately be diligent, incredibly diligent along the way. This next one is one that I know we've talked a lot about on the radio show in the past, but boy, this one is still percolating around out there, isn't it?
Yes, and that is the employer retention credit. This kind of came about after COVID, during COVID, and it was a way for the government to help companies stay afloat when they were staying open during COVID and had employees. So there's a lot of rules to it, though.
Right.
And so the issue here is people were taking advantage of trying to get people to claim the credit when they really weren't eligible, or they weren't eligible for as much as they were saying they were.
Yeah, and it almost became a cottage industry where just the constant approach to businesses about, we can get you this ERC, employee retention credit. And I know, my goodness, I mean, I probably got 100 different emails on it. And the reality is that, we were not one of the businesses that had to shut down and send everybody home. I mean, we were here, every day because as a financial services company, we were exempt anyway here in Florida. But yeah, for those businesses that had to shut down, restaurants and things like that, particularly initially, this was a big credit. But then the abuse just got so rampant on it.
Yeah, it really was bad. And the IRS has basically last year and continuing into this year started a campaign. So basically, if you applied for the credit and you really shouldn't have, you can draw back your claim, and they won't charge you any penalties or anything like that, or interest for doing that. This way, you're not committing anything fraudulent. So they've pulled back about $250 million in claims already.
Wow. Okay. Yeah. So that's significant, and certainly even offering the deal where you just pay 80% back, because typically these firms that were sort of targeting this employee retention credit were charging like 20%.
Correct.
So some of it is you could even just pay back what you actually got, and and not even have to pay back the full amount.
The fee that you had paid to the bad person.
Right. So what else is on that next up on that list anyway?
So next up is creating online accounts, but having someone help you create that IRS online account.
Yeah, you really shouldn't be seeking help from a random third party to set up an account with the IRS or with Social Security or whatever. Get your kids or your grandkids to help you do that.
They're great at stuff like that.
Yeah, don't reach out to some random third party. That is for sure. So, well, we got to take a break. When we return, we're going to still continue the conversation here on this IRS Dirty Dozen tax schemes for 2024. Coming up next here on Dollars and Cents. So if you missed the first part of the show, you know that this week we are celebrating our 40th anniversary as a firm. Spent the first part of the program kind of reminiscing about some of our fondest memories and headlines, and certainly looking forward to that little celebratory cocktail hour that we've got planned for our clients
1st.
on Wednesday. Yep. So that is good. Also on that day, we're going to be on radio Good Morning Orlando, being interviewed because that is our actual 40th anniversary. But later on today, actually, at noon, we're going to be on WKMG CBS on the television station. Once again, we were named the People's Choice winner for Best Financial Planner on the television show Best of Central Florida with Justin Clark and Michaela Nichols. We encourage you to tune into that at noon today on the CBS affiliate WKMG. So happy to have been a part of that show yet again. Kind of neat in terms of the timing that all kind of coincided with this kind of big week for our firm celebrating our 40th anniversary. Also, we're talking about the IRS Dirty Dozen list. That's the educational piece that they put out every year, warning taxpayers about some of the schemes that are out there and things that you need to be aware of. We've talked about a few of them before the break, but there's also some others on the list. And this next one is kind of an odd one, but I guess it's getting a little bit more attention these days.
Yeah, so it's the fuel tax credit, kind of similar to the ERC. It's a credit that is legit, but it is only available to a small scope of people. This would be for like off-highway businesses and farming. But you have the same thing going on where there are these unscrupulous people trying to get people to claim the credit when they're really not eligible. And they're like these fly-by-night companies that they'll put it on your tax return, file it off, and then they're gone.
Right.
And you're receiving a letter from the IRS, saying you owe all this money and you weren't eligible to claim the credit.
Well, and that same kind of general grouping also applies to kind of the next one, because we certainly do see these ads all the time where, oh, we can help you settle with the IRS for pennies on the dollar.
Yeah, so they're called offers and compromise, and that's where if you owe a large debt to the IRS, if you can pay it off in quick amount of time, they're willing to take a reduced amount. So again, it is a legitimate activity that can happen, but people are taking advantage and charging fees for it. And the IRS actually has a tool on their website that's a pre-qualifying tool to see if you're even potentially eligible for an offer and compromise before you even pay anyone. Right.
And the issue is the ads that say we're going to be able to settle for pennies on the dollar. Yeah, the IRS isn't...
they're not that generous.
They're not that generous. Their role is to enforce and get additional compliance in the form of extra tax payments, that is for sure. This next one is one that just always kind of bugs me because it does really purely taking advantage of people's emotionally or good nature, if you will.
Yeah. So this is fake charities, basically. Establishing charities around natural disasters or things going on in the world to pull at people's heartstrings, especially older folks. Yeah. And they try and get them to donate, and not only are they stealing your money, but they're also stealing your personal information at the same time that they're doing it.
Yeah, no, that one's been around a while, but yeah, every natural disaster leads to a new ripple or a new amount of fake charities to help capture those dollars. That's for sure.
Yeah. So next we have what's called antisocial. So this is receiving tax advice from social media platforms, and it always makes me chuckle as occasionally I'll flip through Instagram or something like that. And not only are you seeing more tax advice, you're also seeing financial advice now.
Yeah, it's funny. Next week on the program, I'm going to be joined by our newest certified financial fiduciary at Nelson Financial Planning, Chet Cowart, and he was actually interviewed on television to talk about this particular topic, and some of the advice out there is just unbelievable. And people try and follow financial advice from a 15-second video.
Yeah. And some of the advice is true, some of it's false, some of it is just clickbait. I mean, they're truly not worried about your financial health. They just want you to click and like their little post.
I think Kristen tells a good story of how someone came in and they had listened to the advice about converting over to a Roth based on a TikTok video. And but the TikTok video didn't explain that if you do that, then you have to pay taxes. Yeah. On that entire amount. So they were like, how come I have to pay all these taxes? The TikTok video said I could do it and then be tax-free. Yeah, there's a little bit more to the equation.
I just had that same conversation with somebody yesterday. Yeah.
Wow.
Absolute same conversation. Did not realize that would be a taxable event. Not only taxable, but taxed at their ordinary income, bumping up what they would be taxed on.
Yeah. So, Anyway, this next one is the one that we saw a lot of at the office this season.
Yeah, this one is what they would call spear phishing. So spear phishing is similar to phishing, but they're targeting specific folks. And so in this case, it's tax preparers, and they're trying to send them an email as if they're a new client wanting some tax help, but they're by responding or going through with them, they're stealing the databases and the information from the preparers themselves.
Yeah, we got a bunch of them. So this is the and on the IRS's Dirty Dozen list, they describe this as the new kid in town, and it really is. I don't recall seeing them last year. This year, definitely, there was a proliferation of them, and they kind of start out generic enough of, I'm looking to become a client, can I get you to just take care of my taxes for now, and then we'll talk about everything else, and they just there's always a little something that doesn't quite sound right. And the point of it is that they want you to say, yes, fine, we'll take you on, send us your documents, and then when they send you the link to open up their documents, then it's an infected link and gives them the ability to kind of go into their into your system as well.
I always find it interesting, sort of how you pointed off, that there is always something a little off. Yeah. And it's not. It used to be spelling, but now it's more like grammatically. It's just not like proper English, I guess you could say.
Yeah, I mean, I do think, yes, if you're getting an email, read it carefully. If you see anything that's off in terms of grammar or spelling, punctuation, then, you kind of know it's not really legitimate. But
you got to pay attention.
Right, you got to pay attention.
Especially for us at a busy time, it's
Correct. The next group, the IRS is calling attention to the fact that it's not just everyday Joes. A lot of these scams specifically target the wealthy as well.
Yeah. So this section is basically called the rich get rooked. And there's several. This kind of runs through 9, 10, and 11. There's an art donation deduction where they're basically, buying art, holding it for a short time period, at least a year, and then giving it to a charitable donation as a charitable donation at an increased value. You also have CRATs, which are charitable remainder trust, as well as monetized installment sales.
Yeah, so all kinds of we can save you a bunch of money, and it's sophisticated. And I guess that also brings in the last one, which has to deal with offshore schemes, things like that.
Yep, that's basically foreign accounts, and they also get into digital assets in this section, which are property and
Right.
taxable.
Yeah, correct. You got to report them. That's for sure. Well, yeah, certainly an interesting list each and every year. Hopefully, you did not fall victim to one of those, or if you're thinking of responding to that email, don't after this part of hearing about those dirty dozen tax schemes that certainly are out there. Well, that's about it. We're going to wrap it on up and get on out of here. You've been listening to Dollars and Cents with Joel Garris and Christina Lamb of Nelson Financial Planning, celebrating our 40th year on May 1, this Wednesday. So thank you all to all of the many folks that have been a part of that journey. With that, we'll wrap it up and get on out of here. Thanks for listening to us.